We're taking a broad look at the investing environment and the US and Canadian economies. Our guest, Jim Thorne, Chief Market Strategist at Wellington Altus Private Wealth. Jim, Trump made his tariff threats. Will he follow through on them, or is it just an initial bargaining stance?
I would suggest to you it's a negotiation tactic. But I think we need to take Mr. Trump at face value, that if he doesn't get what he wants, he will implement them. Andy, I think what Mr. Trump is doing, what the Americans are doing, is they're shifting their focus back to the period of time between Alexander Hamilton, after the U.S. Revolution, to President McKinley, where they didn't have an income tax and they generated income through tariffs to protect their industries. So the Americans are going to go through a major structural adjustment. They are going to refocus on real productivity growth in the United States. And if you want to participate in it, great. And if you don't, and you want a tariff and you want to not treat the United States and Mr. Trump fairly, then he will deal with you accordingly. And I think we need to take him at face value. But the thing I would say to you is that Trump administration 2.0 will not be the same as Trump administration 1.0. They're very serious. They've got a really good team. They're going to be focused on government efficiency. They're going to be focused on innovation. They're going to be focused on getting taxes down and creating an environment where we can grow out of it. Because when you think about it, debt to GDP in the United States is 125%. They need to grow out of it. The Treasury Secretary, the nominated Treasury Secretary, Mr. Bissett, came out with a 3-arrow program: 3% real GDP growth, 3% deficit by the end of the term, down from 7, and 3 million barrels additional of oil.
Yeah.
That is a concise, focused, pro-America, pro-growth deficit reduction program. We add on top of that Elon Musk and Doge, or the Department of Economic Efficiency, government efficiency. And they're going to be serious about this. And so that's why I say to you, the U.S. is the place to be. Yeah, of course, there's going to be periods of time when there's a catch-up trade, which I think this is what's happened in Canada since, people forget about the historic outperformance that the S&P 500 and the NASDAQ 100 had relative to Canada in the first half of this year. So it's a catch-up trade. TSX is going to be fine. It's going to be dragged along. But the action is going to be in the United States. And take Mr. Trump's words at face value. Like we talked about before, Andy, what does oil at $40 a barrel mean to Canada?
Yeah, you're very bearish on oil, or you see a real plunge in the price.
I think, well, I'm going off of Mr. Trump wants to cut energy prices in half in his first year. I think the Saudis will defend market share. That's not to say that the Canadian, that the Canadian energy companies aren't fantastically managed. But it's going to be pipelines and oil services names you want to get into because of the drill baby drill era. Not maybe the E&Ps are going to be okay, but maybe they lag. And all I'm really trying to do, Andy, is we're building a portfolio for our clients at Wellington. Our hypothetical goal is 7%, right? How do you achieve it in the best risk-adjusted way? So I would suggest to you that maybe energy is going to have a tough road to hoe in 25.
That's interesting because I think you said 40, but you think 50 is a possible target for oil.
I'm 50, but there are people in Wall Street saying 40, right? So if you can handle that and ride that out, fine. I just don't want people to be selling and freaked out, right? I mean, there's an old saying a trader said to me: there are those that make things happen, there are those people that watch things happen, and then there are those people that say, what the heck just happened? All I'm trying to do is to make sure people don't know what the heck is happening. If you don't want to participate in it and you just want to watch it, that's okay too. But my objective is to sit there and say, don't sit there and go, what the heck is happening? right?
I think that's a paraphrase of Trotsky, actually. Trotsky said something like that as
Yes.
well. Yeah. The humanities in three groups. Leave us with a final thought, though. What about outside North America? Any markets looking promising? Would you bother with Europe these days?
No, I don't want value traps. I do not want to invest in something because it's cheap. I think Europe's a mess. I think China's a mess. I would expect, though, and this is something that I think we need to, when you talked about tariffs, I think Mr. Trump's going to make a significant amount of deals in his first 100 days to 200 days. I think this term is this administration is going to be a lot different. It's going to be a lot more focused on growth. So I think it's important that you get the big trade right, which is having a significant portion of your portfolio in the United States. Other than that, if you want to sit there and around the edges buy a little bit of this or a little bit of that, fine. But it's the big trade, the big allocation into the United States, into the NASDAQ 100 and the S&P 500 that you need to go. And don't forget, Andy, Bitcoin and gold have to be a solid, significant position in your portfolio.
Oh, we never even got into that. Anyway, Jim, always fun. Thank you very much.
Thank you.
Fun and informative.
Thank you.